What's up guys, Chartsmith here, back at it again with another live trade, episode 5 already. Once again it was a long trade. After this live trade I will take you into the technicals of this trade, what I did good, what I did wrong. Right now you can see I'm calculating my profits. This is the one thing you need to do always before taking a trade, so you know how to maximize your wins and how to minimize your losses. This is a really important thing if you don't want to make mistakes in taking profits and being in a trade you can't make any profit on. Unfortunately, it was no good for placing those take profits because this was a stop loss. I will take you over the technicals on what I did wrong and what I did good, so you don't have to make those mistakes and you can earn some money from the Nasdaq chart. So let's get into the technicals. Let's start with analyzing the higher time frame. Let's draw a structure. Our structure is a high, a lower low, followed with a lower high, and once again a new lower low. What can we expect after making a new lower low? We can expect making a new lower high followed with a lower low. As you can see, locally between this high and this low, we started making a new lower high, but it was followed with a higher low. So locally we could say this isn't our higher time frame pivot point for a lower high followed with a lower low. We could expect price to take out this high, move up a bit higher and then reject for a new lower low. But it didn't happen. We didn't even sweep this high and we made a new lower high. So in this local picture we don't know what price is gonna do. We can make a new higher low for a new lower high, or we could make a lower low, or from here we could bounce up and make a new higher high. It isn't clear. We could also form a compression, so just keep making higher lows followed with lower highs. So the local price action wasn't really clear, and most of the times you don't want to touch this. You only want to touch this chart if you have the confirmation we're gonna break these lows and make a new lower low, or we're gonna break the highs and make a new higher high. So let's get to the lower time frames. As you can see, London made a big sell-off, pushing price down. And right now we are ranging a bit. There's a bit of sideways price action. I like these kind of price actions because most of the times the market makers give out a clear direction they want to go to after making a range. So I drew in a range. When we're in a downtrend, we draw our range from low to high. Following our market structure, this is our low, this is our high. We're ranging between these points. We deviated the low once and we deviated the low twice, making it a possible Model 1 TCT accumulation schematic. But here was the first mistake made. Yes, this is looking really nicely for upside because this signals market makers are scaling in their positions, but that isn't confirmed until we break structure towards the upside. This is the structure you want to break for local upside. This is the technical target, so it isn't really interesting for us to play this. But why did you take this trade if you know there is not a confirmed Model 1 TCT accumulation model? Well, that is mistake number one, because you don't trade when you don't have any confirmation price is gonna shift from bearish to bullish. The reasons for taking this trade is one, this possible TCT Model 1, and on the lower time frames we made this low, we pushed up the price aggressively, not yet taking out this high or this high, so making a liquidity trail to take out. And when London pushed price down, they also left behind a really big liquidity trail. So you can say I was blinded by liquidity a bit. Liquidity for the buy side was looking so nice. I only could see the longs. I couldn't get my head around the structure I just drew in that is still really bearish and not yet having a confirmation because we didn't break structure towards the upside. So it's still bearish until proven otherwise. After we made this high, we took out all our extreme liquidity and we got a reaction towards the upside. After making this move up, we made a new low with leaving open this low. That can signal towards bullish price action because if we're leaving open the lows and we're hunting the highs, it can mean we need more liquidity from the highs before moving down lower to take out this liquidity eventually. But We're not hunting anything on the highs. This is nothing. This is no liquidity. Your first liquidity point is here. So we should at least have waited for price to get here. We didn't wait for price to come here, break this high, confirming you can look towards liquidity on the highs. No, what we saw was we made a low, took out all our extreme liquidity, making a SMT with this low over here, push price up, with this push leaving open this low and making a bearish gap for us to inverse. We placed the order on the top of the inverse, our stop below this low, and we wanted to target all the liquidity on the highs over here with our final TP at the technical target of your range high. Once again, everything about this is right, with making an SMT, taking out our extreme liquidity, leaving open our most important low, making a move towards the upside, coming back, defending this low, and once again move price up. But the two things that were wrong is you didn't have the confirmation because you're still leaving open the highs as well. Your higher time frame trend is down, so you have no confirmation you can be bullish and look towards liquidity on the buy side. As you saw on the live trade, our entry got hit, and after the entry, a bit of profit and price just dumps down. It's all really explainable. Afterwards it's really easy to say, but in the moment I was blinded. Before I end this video, I want to take you over my Excel sheet. As you can see, we entered the trade with 9 contracts, making it a total risk of 0.53% and totaling the loss on $288.36. Our account is still almost 1 risk to reward in profit, so it's still fine. I mean, you can have some losses if your winners make up for the losses. It's part of trading. This is what your risk management is for. We had a good trade. We lost 3 trades with 1 almost break-even trade, so our account is still profit and still fine if we take another winner after this or the one after that. This is the screenshot of the trade. And here's my explanation for how I took the trade, what I did wrong, what my confluences were for the trade, so I can learn from this and improve on my mistakes myself. So it's all very simple and clear for me, and now you're updated on the journal as well. If you think this video was helpful and you learned something from my mistakes, please leave a like, leave a comment on what I can do better. I'm always looking to improving myself, so please do, and subscribe so you'll be updated on my future videos. Thank you guys, and I will see you in the next one.